It's about that time of day again, folks. Ladies and gentlemen, good morning. 7:35 Eastern Time here this morning. Welcome back to our crude oil morning prep. We're going from the screen to the floor this morning in what I think to be one of the most unique ways to prepare for your trading day, Monday through Friday, 7:30 a.m. Eastern Time. I'm JJ. I'm a lonely old day trader and a technical analyst here in Los Angeles. I got my buddy Marty Errico from Traders Audio with me today, and Marty's going to be talking directly from the NYMEX exchange. And our screen-to-floor broadcast every morning, I begin with a technical analysis approach. I'm going top-down from weeklies, dailies, all the way down to hourlies, and we're going to finish by anticipating the direction at the open by using one of my favorite clues, and that is the London and the overnight trading session. My job this morning is to find high percentage trading opportunities. And if you've been watching on this broadcast each morning, as you can see, we are very accurate at finding those moves between 8 and 10 o'clock in the morning. So we're looking for high percentage trading opportunities starting at 8 a.m. Eastern Time, and I'm going to be looking at this from a technical standpoint. And then we're going to head over and see Marty. Marty's got his feet on the ground. He's braving the elements. I'm here in a comfortable home office. Marty's on his feet all day long, braving the elements out in the NYMEX floor, and he's going to be talking about what he sees right on the pit. Very, very effective going from the screen to the floor this morning, and I won't hold you guys up any longer. Let's jump right down to charts, and let's take a look at what we're looking at here this morning. First thing I'm going to do is we're going to start with that top-down approach, and I'm going right to the dailies and the weeklies here first. And what I want you guys to see here right off the bat, if you follow our blog, if you read our newsletter last night, we talked about the weekly chart's good at the end of the week, but let's take a look at the daily chart. The daily chart, we've been trading at the high of this price wedge for, a full week now. We jumped up here early in the week, and we talked about this yesterday. We talked about yesterday's broadcast that we had a distinct sideways trading range, and then we had the candlestick broke up, and of course now we can see here we have come right back down into that range. What is that telling us? Folks, remember, I'm an intraday trader, so a daily chart is simply telling the backstory, right? It's providing the color commentary. The daily chart tells me all the information leading up to exactly what's happening today. And I can make assumptions, right? Educated guesses as far as what these candlesticks are trying to tell me. I believe that these candlesticks have a lot of wisdom in them. And I'm going to use this daily candle right now to tell us that these buyers have clearly failed. Whatever buy pressure was there, whatever demand in the market was there, quickly has been removed from the market, and now the sellers have taken back over. There's a lot more, though, hidden behind this chart. Think about what we've seen over the last 10 days. What has the tone of the news been the last 10 days? Well, we saw lower than expected jobless claims, better than expected statements from the FOMC. Jobs report came out bullish. We've had, for the most part, very bullish economic news here in the U.S. Now, let's apply that to crude oil. What does bullish economic news, what would that cause somebody who is trading crude oil? What would that cause you to do? Well, if I thought that the dollar would be strengthening, I would probably also think that I could plan the next business trip, that I could invest in a new company, that I could plan the next vacation with my family. What does that mean? That means more people filling up the old station wagons, piling the kids in, and going on vacation at Disney World. So we know that positive economic data will normally lead to increased demand on crude oil futures. I'm going to start a new business. I'm going to take that trip I've been postponing. Right? I'm going to expand the business that I'm doing. And so we know that positive news will usually result in rising prices. Well, why on earth would prices be falling here? What that tells me is, and of course, I always think of it as, whatever should happen, when it doesn't happen, that's when I have a trading opportunity. Remember, as traders, we're coming into the market every morning and trying to figure out what's different. What's different between today and yesterday? I saw this happen last week. What's different? This morning, what's different is these news events should have had prices pushing higher, but clearly we were unable to retest our 97 that we saw only 10 days ago, right? 2 weeks ago. So now we can see here, now we've got a retest. We've failed. Guys, just like we said last night on our newsletter, this might just be the perfect selling opportunity we've seen in quite some time. Now, it's not going to come easy. You know that crude oil is going to take your money if you let it. So let's take a look at some faster time frames now, and I want to show you guys exactly how we're going to play what may be one of the biggest selling opportunities we get over the past few weeks. Here's a much faster time frame, and I want to drill down here, guys, to a 4-hour chart first. And I want you guys to see that, yes, we do have some selling pressure. We've got lower highs. We don't have lower lows yet. And those lower lows are exactly what I'm going to be looking for before we call this thing a collapse. I can't quite commit to my comment earlier that we might have the biggest sell-off here we've seen all week. Because as you can see, I'd be foolish to say that we're going to just break right through this 95-35 buy zone. Guys, this is a classic wedge pattern. And if you're a member of our trade room, if you read any of our stuff, you know that when it comes to a price wedge, or of course some people will call this a bull pennant or a flag pattern, right? I call it a wedge, a triangle, potato, potato. How do we trade it? We trade this by understanding that the pivot points that create a price wedge, the highs and the lows, these are the most important levels of this wedge, which means I cannot call this big short until we get below that 95.35 and below the 94.85. So what I'm going to be looking for is, I'm going to be looking for today a close below 94.85. I am going to be very, very careful not to just simply sell that close. Ideally, what I'm looking for is a break lower, a retracement that does not exceed 95 even, and then into the short. I have a Fibonacci-based trigger zone on the way down at 93. That makes for an easy midterm target today. So if we have any sellers out there today, look for that 93.50 area to be an excellent long-term end-of-day, possibly end-of-morning session target. Again, I've got to get priced, though, below this buy zone. This buy zone is going to cause me problems most likely. And as we bury into this 95.35, this is where the buyers are going to have to react with some demand. If they don't, we're going to see this daily chart candle get much, much bigger here today. It's easy to see a simple Fibonacci pullback is likely, so we can easily see this coming all the way back down to 93 here by the end of the morning session. This is only a 4-hour. Let's bridge the gap now. Let's take a look at what the intraday traders will be using here today. And here is a great example. Now take out this 60-minute chart. I want you to zoom out a little bit, and I want to show you here this channel. Now it's a little bit tough to see when I zoom all the way out on this chart, but I want you to see here, look at the levels of confluence coming back on this 60-minute chart. What happened in the past is likely to happen in the future. What was resistance is likely to become support. Traders like me are looking for these levels of confluence. That is where we can draw the bottom portion of this bearish channel. So now you can see where I start to get very anxious to see about 93.50. You can see that it would take not a lot here, a little push to the downside, and we're going to get this baby to drop here to that 93. Again, I had said 93.50 on that 4-hour, and there's the 50 right there. So it's easy to see here that we have a short-term bear channel. That, folks, is probably going to be our biggest clue today. Now, we all know direction is relatively easy to predict, right? Just turn on CNBC or Bloomberg. All kinds of brilliant minds predicting direction. Gold's going to 20,000, right? Guarantee it. Well, we all know the difference between somebody on CNBC and the difference between somebody who's a real trader is how do we get the trade? How do we get into this position with low risk, high reward opportunities? Anybody can hit the sell button, but how do I do it within my risk parameters? This bearish channel tells me that the best trade today is probably not going to be short right now. Now, you know Crude. Crude will take whatever I say and do whatever the heck it wants, right? So we got to be aware of that market personality of crude oil futures. But this bearish channel is screaming at us right now. Get ready for a possible bounce back up to the highs, and that we call these advanced price structures. The advanced price structure on this chart tells me the highest percentage trade is going to be to sell the top of this bear channel. Now that's going to be if we get a bounce. And the next chart I show you guys is going to be a very important chart that's going to show you exactly why I think we're going to be likely to get that bounce before we get the big drop. So use this bearish channel either A, as a reason to avoid aggressively selling here too early, right? We don't want to sell into the bottom of that channel. It's going to bounce up, take your head off, take your money, and then make you wish you would have stayed in that trade when it keeps making new lower lows. This is a price wedge. This is a two-sided market. We have to expect those fake out breakouts, but you're going to get this bounce off of this bearish channel, and all we got to do now, folks, is wait to sell as soon as we find it bouncing off the highs of that channel. And again, we're looking for the lows of that long-term channel as the final target. I'm going to put all these charts up on the blog once we're done here today. As you can see, we just tagged that 95.18 area, and we're looking good here to test the lows of that channel. If you're trading right now, you missed it. This is too dangerous here to be trading short right now. If you traded too late, you missed it. Wait for the pullback. In this case, wait for the retracement, and we'll get the selling opportunity. The same thing is true here in the 30-minute. The 30-minute chart really does a great job at illustrating exactly what I just talked about. Look at the inflection point. What was resistance becomes support. And again, we can see there's that 94.50 right there. Easy to spot. We can easily see that as being a great target here in the relative short term. Now, we all know this price can really tumble for us. I want to show you, though, another very important chart, and we call this the VIP chart. The VIP chart, the very important price levels chart, this is the chart I'm going to be using to make my first few trades of the morning today. This is the chart that we've been so accurate with, projecting those 8 o'clock to 9:30, 10 o'clock moves. In fact, yesterday we called it literally to the tick. Well, this morning what we're seeing here is the London trading session. The London trading session is a key component to our success each morning, as far as I'm concerned, in my humble opinion. What I want you guys to see about the London session here is its range. The London session is relatively narrow. And when the London session is relatively narrow, that means we still have room here to break out of London session and keep on going. I have a short-term reversal target at 95.04. 95.04. That is where I expect if we get a close below 95.24, if this 5-minute candle, if we get a close below 95.24, we will be testing that 95.04. Now remember, folks, in my humble opinion, we've already missed the short. If you're looking to sell right now, you're tripping over dollar bills to pick up nickels and dimes, folks. This is a small time target and a big time risk. Risk reward is way off on this trade right now. If you've watched my presentation before, you know that I'm looking for a close below that London reversal zone, and then I'm going down to my target. Where was that close? It was just a few moments ago, right after I hit the record button here in the call today. So again, if you follow along with me, you've already been short. If you're looking to get short right now, I'm sorry, but this is not the time to do it. I'm going to wait for exactly what I talked about before. I'm going to wait for price now to bounce, give me that chance to get back into the short, and we do expect this price to want to go lower. Now, I might be completely wrong. I often am. Luckily, being a trader is like being a baseball player. I can hit 400 and still make $1 million. I'm going to look for this. If I'm wrong, as soon as we close back above that previous low of day, we know we're bullish again. If we get back into that London reversal zone, you know what we're doing. We're now going to expect this price to go jumping back higher. So the line in the sand here today, if we get a close back above 95.47, a close back above 95.47, the reversal has already happened, and now we're waiting to get in, right, for that long-term short at the top of this channel. If price closes below 95.24, I do expect price to quickly move to 95.04. Again, I'm having a difficult time here calling this short right now because of this drop already. So wait for the retracement, wait for the chance to sell it again, right, and use that. Hey, and there you go. There's 95.04. Boy, I hate that. I don't know what's worse, being exactly right or not being on the trade with you guys. As you can see here, there goes your 95.04. So now that we're there, now we expect to see the bounce here and come right back up. We have no major news this morning here, guys. All we have is Bernanke at 9:30. Guys, I'm saying short-term bullish, long-term bearish. I want to thank you guys for tuning in this morning. My name is Joseph James. Thank you for being here. Marty, sorry to take up all your time here this morning on the call. Got a lot to talk about here as always. What are you seeing over there on the NYMEX exchange? Are you seeing a little bit of what I'm seeing? Are you seeing this long-term short that I'm seeing here, Marty? How are we doing this morning?
Absolutely. You can hear me, right?
Absolutely.
Okay, cool. So, yeah, I am seeing this long-term short, and I'm actually contemplating on it, whether the timing is going to be right on this trade. Now, I'm looking at it and I'm saying to myself, we definitely need this open below this 95 even level, 94. What was the exact level I had? Hold on. I have 94. Wrote it down here on the board. Yeah, 94.85. I got to open below to get that bearish-like sentiment, right? If not, hey, we'll probably then just start to see. There you go. So we need an open below these levels that we're looking at right here, right now, which we're making at the moment. Again, we open the pit session below this level, we're going to be in that bearish-like scenario because you can see the little bit of a sideways range that we've been in here, the wedge, right? You can see where the support becomes resistance there. We have 95.25, 94.45. That's where we really have to get below. But I'm saying if we can open the pit session below that wedge right there that I have as well, now go to the right below that cayenne wedge, we need to open up below that to really get things going down here again, and then go straight to the bottom of the overall bigger wedge that you got there. Yep. So that's all we need to do. We need to break below that. So, what's the evidence looking like this morning? Well, evidence is looking rather bearish here this morning. Again, on my sheets here, what I'm looking at here is first we're going to look at our risk-on, risk-off sentiment. We're going to take a look at your dollar index, and what do we see in your dollar? A huge, huge uptick in the dollar. Look at this. I believe we're trading almost into the $83 handle now. Yesterday we were in the 81 handle. So this dollar here now is absolutely ripping to the upside. Now, of course, the inverted correlation between the dollar and crude, we can always look at a range and judge that some of the range is attributed to the dollar and the euro. So, right, so we're looking at your dollar. We're in the 83 handle now. I got 83.12 evens printing on the dollar index, which is very bearish for crude. Again, we just take a quick look at the euro. We see the euro is also very bearish as well here today, down the 129 handle now, or 129.98. We're also taking a look at your Canadian. Your Canadian also higher today. 99.20 is that Canadian dollar CAD trades higher with our U.S. dollar. And then the British and the yen both really moving big time as well. But let's focus on just that dollar index the most. So since we have a risk-on sentiment, we can rely now on other markets to help us influence and give us compensating factors to look at one direction in the market and to help us manage a trade. So what we're going to be looking at is things like our Brent WTI spread, right? Brent WTI spread, 820 last print, very wide here. We're very, very wide here. Again, I'm looking at just about almost 70 cents here. Backwardation from yesterday. Again, we were in the low 7 handle yesterday, if you guys remember, and now we're trading now in the 8 handle. So again, we see big backwardation in your Brent WTI spread. We look at our calendar spreads. Wow, the backwardation in these calendar spreads as well are looking kind of promising here to the downside. As I look at the June-July contract right now, I'm looking at June-July. That's all on that sheet that I sent you, JJ, the Word document. June-July right now here, you see the other one. June-July here is just about 26 cents in the spread. I'm looking also at your June to, let's look at June to August. June to August, very impressive, 30 cents, backwardation, big time here. And then we also have your June to Sep here, also giving us some backwardation of about 10 cents. So, man, these spreads are very wide here today. That's very promising for, again, bearish-like scenario, lower price levels, as you can see. The date's wrong on that, but that's fine. I put the 9th, but that's the 10th. So you can see right here, we're looking at a lower range-bound market to the downside. We're looking at our spreads right now. I think that's the wrong one. JJ. Yeah, that is the wrong one. Sorry. Yeah, you can take it off. So basically what I'm doing is I'm looking at the spreads, and the spreads are all giving us a bearish-like indication. As we move further out and we look at the crack values from gasoline, automotive heating oil, they're all giving us a type of bearish-like scenario as well. Look at where our crack values are. 89.0750 right now. That's going to be bearish as well. 89 handle. is equivalating for these for this 94 handle for your crude. So again, if we get this opening below this big support that we have here, 94.63, we get some type of opening here into the 94 handle, that would be promising. Again, we could expect a little bit of a gap fill now, as JJ called the London session, and it is the London session. It's also our overnight session from 2:30 closing bell to 9 o'clock opening bell. We have a gap in price, and again, usually we come and we fill it. So we could see a little bit of a gap fill right off the bat. But I'll bet you guys right off the bell we'll see probably a lot of locals probably scaling into their positions short. Okay, so let's now continue on here. We're going to be looking now at some other indications as we just looked at basically our risk on, risk off sentiment. Let's look at our multiple market divergence. Right now we're watching all of our markets kind of fading off their high prints. They're all fading just a bit, and that's what's really great about this, because I'm looking at your crude. I got 94.85s trading right now. We're $1.50 off of yesterday's settle price. Yeah, we're starting to fade off this news because we're starting to see this geopolitical news that made us rally last week isn't really significant. And plus, the technical analysis is taking over now. No news, no data scheduled for release today. The other news is long gone, so now we're sitting in a spot where technicals and this can run the market. So as we take a look at this crude again, I got us down about $1.50. Implied volatility rising here. We were just at 21% in vol. Now I have 23% in vol. Again, just about 10 minutes ago we were 21% in implied volatility. Implied volatility now is at 23%. The vol index trades 22.5. We're taking a look at the RBOB gasoline. I got $2.85 and a quarter trading an hour. We're talking 3 pennies lower on the day. Implied volatility just about 20%. The vol index 20.25. As we continue to watch this vol also coming up just a bit. Heating oil next, ladies and gentlemen, 289.45 trade on the heating oil. We're talking 4 pennies lower on the day. We see your implied volatility just about 17%, and the vol index 17%. All right, let's look at open interest here. On your crude, open interest currently stands at 208,519. Again, we got the new issues out on the open interest level, so you can see this. The reason why I have 221,000 on there is just to show you the difference between. I put that level on there just so you can see how it's changing. So open interest falling just a bit. You can see that's 208,519, and they bring a lot of it into the June contract as well, guys. I mean, the July contract. Open interest in July contract, 248,797. That's very bearish there. So you can see they transfer open interest. They transfer the amount of short traded contracts and the open interest levels. RBOB open interest, ladies and gentlemen, this morning currently stands 90,382. That's bearish as well. It's a little bit higher from yesterday's. And we're also taking a look at your heating oil. We have heating oil open interest 87,541. That's actually lower from yesterday, believe it or not. So that's bullish. But again, we're looking at everything else is so overwhelmingly looking to the downside right now. As we continue on, ladies and gentlemen, we're taking a look at what's happening here in your Brent. Brent trading below 104, below 103.5, now 103.15 on your Brent crude. As we continue to watch this market falling as well, we can definitely rely on Brent. We can rely on the equities markets to give us some type of influence, guys. And we can continue to keep an eye on this dollar, bonds, and our risk on, risk off sentiment. So as I mentioned here, volatility has been just kind of skewing up just a bit. I got delta here, guys, in these strike levels around 94 half and 95 even. Delta comes up to about 60%. So the idea of movement, they're buying the idea of movement, and that indeed is what we're seeing. All right, now let's review some levels here, ladies and gentlemen, and then we're going to get ready to rock and roll. Okay, so first in the pit yesterday, big trades, guys, in the pit. What I've been seeing, besides relative to the range that we've been trading, a lot of position bouncing, a lot of scalping coming into play in respect to the pit. But in the options, I saw on the put side, big trades, guys, with sides associated. On the put side, I see the 90 put, 92, 94, 95. All those puts in the short-term daily options, weekly, and our monthly, they all trade over 5,000 strike levels. Again, I got 5,000 strikes in 5,000 in volume in the 90 strike, in the 92 strike, 94, and 95 put. I got over 2,000 in volume, 2,500 to 2,000. Looking over on the call side, so they show up a lot of risk to the downside, you can see, compared to what they do on the call side. On skew, we look at skew now, guys, and we look at the calls here. We have the June 95 half call trade over only 820 times. So you guys do the math there compared to the puts. And then we also saw a little of interest, guys, in the 96 to $100 June. I saw June hundreds trade a couple times. I saw July hundreds trade. I saw Augie 105 calls also trade a little bit, but that was just outer months, and we're talking outer months. But today, what we saw yesterday was, besides that 94 half call, they trade 820 times, which is nothing compared to all those levels that we were looking at. We had 96 and 100. Those strike levels trade, but they only trade with about 1,000 lots to them, so you can see they sure up a little bit of a risk to the upside, but mainly shooting for the downside. Now, once we get into this $94 level, that 94 half to 92 half put spread comes into play as well. That traded over 7,000 times in the pit yesterday. Again, we're talking about the 94 half to 92 half put spread. Levels, ladies and gentlemen, on your crude, and then we're going to get you guys out of here. I got your high from yesterday's pit session, 96.47. Your low, 95.35. We closed and settled the day near the highs at 96.32. We have a net change of a positive 37 ticks on the day with about a $1.12 range. Now, as we were talking about a $1.12 range. Today, your daily pivot, ladies and gentlemen, is going to be 96.06. Once again, it's 96.06, your daily pivot today. I got some resistance above 96.77, 97.41, and 98.46. I got some support down below, ladies and gentlemen, here, 95.65, 94.94, and 93.82. Again, guys, those are your levels and of support resistance above and below. With your daily pivot, 96.06. I think I have to make a correction on that sheet there. It says daily pivot 98.30. Nope. We're going to be looking at a daily pivot 96.06 again for your pit session level. Natural gas, real quickly here. We have been watching inventory numbers, and we did see natural gas come off just a bit yesterday. Again, we're going to go over levels real quick. 402 even was your high, your low, 388.30. We closed and settled the day right in the middle at 398.10. We have about a 1 penny net change to the upside. So again, that's like 1 penny, 1 and 1 penny. You can see that's nothing. A little tick. That's 11 ticks to the upside we only had yesterday. Range, it was about 14 cents though. After inventory numbers, we did see a decent range. Daily pivot today in your natural gas is as follows: 396.10. Once again, this 396.10 is going to be your daily pivot. Resistance, support, resistance above, below, resistance above 403.90, 409.80, and 423.50. Support down below 390.20, 382.40, and 368.70. Again, I have 34% in volatility. And looking at the vol index, I got 41.75 in the vol index. So again, 34% in the implied. The vol index trades 41.75. Largest strike levels here, we saw a lot of interest in the 425 calls, which were nowhere near, and then they just trade also the $4 put heavily to the downside. Looking for targets, again, the premium expenditure on the trade, I think, was going to be around, 387 or 386, so that $4 put will get us down there again. So that's really about it, ladies and gentlemen. Here again, we're going to be watching our geopolitical news. We're going to be watching for any type of breaking news coming out of the oil markets today, and again, trade accordingly, ladies and gentlemen. It's been wonderful to be with you guys here again. Now we have our game plan of attack. We're going to post that up on the blog. JJ's going to take care of that. And once again, ladies and gentlemen, we are going to be keeping an eye here on our news here, any type of breaking news that we get unexpectedly. So now I'm going to throw it back on over to JJ.
Thanks so much, Marty. As always, great to hear you here in the NYMEX. Always having a very unique way of looking at these markets from your point of view. Thank you so much for coming out and joining us today, Marty. Well, like I said earlier, we were expecting this market wanted to fall out of bed. I guess we got exactly what we were talking about. Here is a very, very big clue, and I want you guys to see the close here of that 4-hour candle. This 4-hour chart, very, very accurate at showing us longer-term direction, and what we see here is that candlestick closed below that buy zone. When we get it closed below the buy zone, we now know there's enough supply to meet the demand, and our short-term target now is 94.27. So it looks like I was a little bit off on how quickly they were going to make this thing tumble. But as you can see, though, we got the direction right. Now all we got to do is wait for that retracement, wait for that perfect opportunity to get into the short, and keep on selling it lower this morning. I'll be looking for trading opportunities here going into the open, looking to sell retracements on the way down. Don't forget, As Marty said, we have no major news here on the schedule today. We do have Bernanke hitting the microphone at 9:30 a.m., so be aware of that. As always, come out and see me anytime in our trade room at School of Trade. Don't forget to log in and listen to Marty and Jeffrey at Traders Audio from the NYMEX and every morning at 8:50 a.m. Eastern Time. Miles, what level is the retracement at this point? Miles, come out and join me in the trade room, and I'll give you all the clarification on retracements. I'd be happy to share with you all the information. But for now, though, I got to run for now. If you guys want to know more information about how I trade, give me a call in the office, shoot me an email. I'd be happy to tell you all the secrets of my success. I'm JJ at School of Trade. That was Marty at Traders Audio. Thank you for listening in today, Miles. Thank you, everybody, for coming in and listening in. And we'll catch you guys here Monday morning. Have a great Friday out there. Get in early, get out, take that money and run, and we'll see you guys here Monday morning, 7:30 a.m. We're going to go from the screen to the floor. Adios, amigos. Bye-bye for now.